Good morning, Alex. See, I think my sense is that guidance which was given by the company was disappointing. I think they have reduced their guidance, and that was one factor which actually made the market negative on the company. See, my sense is that the investor has purchased the stock at a peak level, and so in the very immediate near term, to get his buying price again would be definitely be a little problematic unless he's got a 2 year view, because the overall EMS space is going to grow quite significantly. Keynes has also said that they would be entering the semiconductor kind of market, and I think in terms of their technical expertise, in terms of their management bandwidth, I think it's a great business. But I think the time frame has to be slightly longer term. I think if we can give a time frame of at least 2 years, and obviously average some quantity at the current level, it's not possible that in the short term he could make money. But yes, in the next 2 years, if you can hold on and believe the story, and EMS as a space is definitely showing a lot of promise, I think he could definitely get a decent risk reward. So, the opportunity is there, but I think he needs to give in a long term time frame. Clearly, Dixon is one of those companies which is one of the market favorites in the EMS space. And, whenever some good news or some policy announcements for EMS comes in, and I think, outsourcing EMS, which I think Dixon is very well known for, the kind of brands they are associated with. I won't be surprised that again, the time frame has to be slightly longer term. I think, announcements can come in tomorrow, the stock can go up, but that won't happen in a hurry. I think the stock has now consolidated, and I think markets obviously now want to look at the earnings quality numbers post these kind of policy announcements. So I think if the investor can have a slightly longer term time frame, he can definitely bet on it. But I would say that it's always better to wait for the budget announcements tomorrow, because what comes out finally is going to decide the trend for the overall market and specific stocks. So longer term prospects are definitely positive. In the short term, whether it touches 20,000 or 18,000, it's a little difficult to predict as of now. So I think clearly, I think on an ongoing basis, we have been seeing that most of the railway, players are getting orders. The budget may not have announced something last year, but I think railways is going to be a focus area for the government. I think very clearly in terms of infrastructure, in terms of the modernization of railways, a lot of action has already been initiated by the government, and I think this will continue for the next say 2 to 3 years. So I think coming specifically to RVNL, I think it has a very strong order book. My sense is that unless the investor can patiently wait for the next 12-15 months, order inflows will definitely come in. But I think how quickly the company executes these projects, execution is going to be very important. So I think RVNL is definitely standing tall, and I think should do reasonably well for FY26 also. So keep a time frame of 12 to 15 months, because the stock has corrected from its buy price. But I think if he can patiently wait for some more time, I think he can definitely expect a decent risk reward. So I think holding the stock would be more prudent, because considering the fact that the numbers are not going to be anything having any big fireworks. But yes, I think the commentary on the demerger is very important, because I think that is the the forward way of looking how value is going to be distributed across the five companies which are going to be demerged out of the main entity. So I think he can hold on. He's got a reasonably large quantity as of now. It's better that he waits for the results and the commentary, because I think markets are really looking at what kind of value comes for every company. The only positive part about this demerger is that debt gets distributed. I think debt was a very big pain point for Vedanta on a consolidated level. So I think going forward, it's going to be only specific companies within this five, demerger companies which are going to get re-rated. Of course, for the shareholder, these stocks come free of cost. But I think fresh buying, if it all has to be done, I think one can wait, for tomorrow's numbers, and probably, once the demerger happens, one can pick and choose whichever company, has got the best growth prospects. Clearly, I think out of the three, I would suggest that Cyient and Cyient DLM are stocks where long-term prospects appear to be quite positive. Although, in the near term, Cyient DLM, which came out with its quarter 3 numbers, were quite disappointing. But I think overall, the kind of business opportunity which Cyient DLM caters to is a very large market. And I think they have a very well established, list of marquee customers. So I think, Cyient on the frontline IT stock has been one of those companies which has been delivering steady kind of numbers. So, these are companies where one gets a decent amount of comfort to invest for the longer term. As far as Tanla platform is concerned, I think it's an OTT value-added kind of telecom player. Hopefully, with the 5G rollout and with better services, even this company should do well. But I think here also numbers are not expected to improve at least for the next 1 or 2 quarters. So I would say is that Cyient and Cyient DLM can be held on for a slightly longer term period. Tanla, I think one needs to review at least for the next couple of quarters, and then one can take a fresh review. If he can have a 2 to 3 year view, definitely he can buy in more. But I think it's always better to buy the stock when there's a decent correction. I think his entry price has been pretty good. I would say is that maybe from the current price, if we can expect us further kind of a lower level, that would give him a better risk reward. I think even if he does decide to buy, I think it's always better to buy in a SIP style so that his averaging works out in his favor. I think the entire jewelry space has been doing pretty well. If you look at Kalyan or you look at Senco Gold, which operates largely in Eastern India, I think PN Gadgil definitely also has a very niche positioning in the market. And I think, the only part which the investor should realize is that, these stocks have gone up significantly. So I think if one were to invest at these levels, the tail room for growth is definitely there. Uh, Gold, as an asset class has been attracting a lot of buyers. And most importantly, if the investor can give in at least 12 to 15 months and then gradually buy the stock, I think earnings numbers are going to be much better for FY26. Hopefully, consumption, for the gold jewelry market is growing. The unorganized sector share is gradually reducing, and that is being eaten away by the organized sector players. So net, I think the opportunity is large, and I think good players like PN Gadgil would benefit. But time frame for investment should be at least 1.5 years. Only then one can get a decent risk reward. Yeah, I think if you look at the business, Alex, they are a large dominant player in the agri market as well as they are into the custom synthesis market. And both these markets offer a very strong kind of runway for growth. In between, of course, there have been some quarters where the company missed its estimates. But I think looking at the kind of quality of management and the kind of growth opportunity, both on the custom synthesis as well as on the agro chemical side, my sense is that this company has got the potential to actually do reasonably well over the next say 2 to 3 years. But I think the investor should realize that the agrochemical business is obviously dependent on the monsoon factor. So in case the monsoon does not play out to that expectation, then there could be a little bit of underperformance. But otherwise, the company has done remarkably well in the last 3 to 4 years. And he's right in mentioning that all the operating metrics like ROC, return on equity, earnings growth, everything has shaped up pretty well. So I think he can take a reasonable kind of position here, provided he's got at least a 2 year plus kind of time frame for his investment. No, I think see, electric vehicles as a product segment is gaining very fast momentum in the country, and I think tomorrow's budget could possibly announce some relief for the electric vehicle mobility sector. So I think the investor is probably a little confused, whether one should look at the short term or the longer term. But I think if the investor has a couple of years in mind, then I think she should hold on. But if she's got a short-term view, then I think it's better to exit. I think it's better to put money in some well-established sector like public sector banks or typically even in some auto kind of stocks or auto ancillaries. So I think if she wants to have a short-term view, she can take out the capital and put in companies like Ask Automotive, or for that reason, something like a Bharat Forge. These are well-established players where capital protection is guaranteed. The business is well proven. So I think there she could expect steady to decent returns over the next 12 to 15 months. But if she's got a 2 year view, then I think she should continue to hold. I think, see, first of all, Maharashtra Seamless is one of the oldest players which caters to the oil and gas sector. And I think, in terms of order book, in terms of their positioning, they are a well established vendor to ONGC. My sense is that, as and how oil and gas investments in the country grow, you're going to see a lot of demand for, pipes which are required for the oil and gas sector. And I think Maharashtra Seamless is well positioned. See, now if he has purchased it about a couple of months back, my sense is that he needs to give in some time for this investment to play out. It's a stock which is well researched and well, tracked by a lot of analysts. So typically, I think, he can expect a decent return only and unless he keeps the stock with him for at least the next 12 to 18 months. Hopefully, something comes in the budget tomorrow that could lead to a short-term spike. But longer-term prospects are good. I think the promoter, the business, everything looks good. But yes, he'll have to give some time to get some decent risk reward here. No, see, I think the broking business has come under significant pressure. And I think one reason for the underperformance was that Q3 numbers have not been up to market expectations. that is probably one of the key reasons why the stock has underperformed, because Motilal Oswal is one of the large retail and institutional brokers. They have various other businesses like the asset management company, typically a lot of fee based activities which they do. But I think recent developments on Kalyan Jewelers also has actually left a lot of discomfort with investors, because they had a large holding in Kalyan Jewelers, and that obviously had an impact on their portfolios. But longer term, I would believe that this company has a very dynamic and a very strong management bandwidth. They have been in the market for various cycles. So I think unless the investor has got a 2 to 3 year kind of time frame, he should stick to his investment. And he's right in saying that longer term prospects will continue to flourish. Indian capital markets are bound to do well, and to that extent, I think unless the time frame is long term, in the short term, the stock will continue to remain volatile. But longer term, I think you could even think of averaging and probably then looking to stay invested for the next 2 to 3 years.